All right, it's November 6th, 2025. I'm up around $3,400 on the day. Took 2 wins today. I'm going to go over what went into those trades and why I took them. Okay, so I trade the 4-hour power of 3. So I'm looking for price to open, manipulate, and form the lower or upper wick of the 4-hour candle, and then distribute in the opposite direction. Same thing for a bearish candle. I want to see it open, manipulate higher, put in that top wick, and then distribute lower. Now I pair this with AMD. Now AMD is accumulation, manipulation, and distribution. Now what that looks like. I'm looking for price to consolidate. That's the accumulation phase. Manipulate the liquidity that it's generating during that accumulation phase, and then distribute in the opposite direction. Okay. So during this accumulation, we form sell side liquidity. It gets swept, and then we move in the opposite direction. A lot of times on this manipulation leg, I want to see a fair value gap tapped. Same thing for a bearish example, just the opposite direction. We look for accumulation, highs to be manipulated, distribution in the opposite direction. Okay, buy side liquidity is generated and swept, and we also get extra confirmation when we tap into a fair value gap. Okay, so there's the accumulation leg, there's the manipulation, and there's the distribution. And my entry a lot of times comes in this area where we get confirmation that this was just a manipulation. We start to see structure break in this direction of the distribution leg, and I usually get an entry, something like that, and I put my stop at the low of the manipulation leg. So let's go now look at the trades I took today and see how these concepts played out in those examples. Okay, so the first trade, going into 10 a.m. open, I have that 10 a.m. open marked out with this red line right here. 10 a.m. opens, we push down further towards this high time frame low right here. Okay, we push down and we get super close. We actually almost touch the line and then push back up. So we make relative equal lows right here. With relative equals lows like that, that's something that I want to see price take out, especially when we've been this bearish all morning. Okay, so I'm definitely having that as my target, but I need to see some sort of manipulation because we have no upper wick on this 4-hour candle. We see the 10 a.m. opens right here and just pushes straight down. So there's no upper wick at this point. Okay, so as time goes on, we get a 15-minute bearish fair value gap that forms right above that 10 a.m. open. Okay, now on the 1-minute chart, we can see right here accumulation. Okay, price accumulates right above this sell side liquidity, forms some buy side liquidity, sweeps that out, taps into this 15-minute fair value gap, and now I'm looking for 1-minute confirmation. So I'm looking for fair value gaps, change in the state of delivery, inverse fair value gaps. So let's see what we get. We push in here, and I'm watching this. This is our only bullish fair value gap on this leg that I'm looking for an inverse. Okay, and right here on our way down, we form a bearish fair value gap. Okay, so let's see how price reacts to this. Push down, tap into this bullish fair value gap initially, which sends us higher into this bearish fair value gap. Now we can see these bodies right here respect and hold that bearish fair value gap. From there, price pushes lower and we get the inverse. Okay, that's my entry right here on this candle closure. I put my stop at the high of the manipulation, and I'm targeting those relative equal lows that we formed. Okay, super simple. We had another low down here that I believe price could take out, so I took off half of my position here and let things run a little bit lower. And then once I saw this candle start to push up, I just closed it out there. but I grabbed around a 2.5R on this trade. Super nice textbook AMD accumulation right here. Manipulate into the 15-minute fair value gap. Distribution lower. Okay, clear example of what I just explained before. Accumulation, manipulate that buy side liquidity into a high time frame fair value gap, distribution lower. Okay, just like that. See it right here. All right, now let's go into the 2 p.m. example that we had today. All right, so I marked out the 2 p.m. open right here with this red line. Going into that session, that other low that I was looking at had been taken out, and price really slowed up at that point. So we could see that we're getting a reaction off of that high time frame liquidity sweep. Okay, so going into this, I'm somewhat bullish. Now, before the 2 p.m. open, we get a nice leg up and we get accumulation. Clear accumulation here. Sell side liquidity gets formed, and this happens right above a 5-minute fair value gap. We can see right here. Okay. So actually before the 2 p.m. open, that sell side liquidity gets taken out. ES did not take this low right here, while NQ did. So that formed a bullish SMT for us. It's more confirmation. And now I'm watching these fair value gaps right here. Okay, if these get disrespected and we get an inverse fair value gap, I have my entry. Okay. Right here, very shortly into the session, we get a nice push up, strong closure above those gaps. And I take my entry. I actually let it pull back a little bit. So my entry was right around there. Put my stop at the manipulation low right here. I didn't really have any targets because this was like a large high time frame imbalance here internally. So I just wanted to aim for a 2 risk to reward. Right there. So we see right off my entry, nice strong push up. Then we get a reaccumulation leg, okay? So it's pretty much what we saw here. We just do it again after that push up. And then following that reaccumulation, we get another nice push up, hits my full TP. Okay, and this is another super clear example of my model. Accumulation right here. Manipulates, takes out the sell side liquidity, taps into a fair value gap, and then we get distribution higher. Okay, these are clear examples we got today. Let me draw that out for you. Accumulates, manipulates, distributes. Sell side liquidity gets taken. Fair value gap gets tapped. We get a change in our order flow with the inverse fair value gaps to the upside. And then we get the distribution. Okay, clear examples today. Great price action. AMD setups. Can't complain. I mean, this is exactly what I'm looking for when I go into the market. So that was it for my day. 2 simple trades. And I went up around $3,400 on my Apex funded account. And that'll be it.